Hello and welcome to another edition of the weekly Forex market update. Okay, what we have in front of us is a daily chart of the euro, and what we're seeing with the euro currency is that we broke out of a downward trend line. Okay, let me just expand to the weekly chart. We have this downtrend line drawn off of the mid 2008 high, the 2011 high, and the high that was made in late 2013. So the market is pulling back to test this resistance level. And what we could see is that the market could accelerate to the north from here. Look for support at 137 flat or 136.50. This 137 level represents the 50%, roughly the 50% retracement of the move from 135 up to 139.50. So we may see the market continue to bounce here. This recording was done Monday morning. We're seeing that the euro is experiencing a bid, and we could bounce from here and take out this 139.50 eventually, or we may go down to the 136.50 level or even the 135.80 level, and the market may turn around from there. But ultimately, I'm looking for the market to take out this previous high at 139.66 on its way northward. So remember, broad picture, we're in an uptrend on the euro, so I will be on the buy side of the market. Okay, taking a look at the British pound, we see that we are in a consolidation. The market broke out of a triangular consolidation on the weekly chart. You can see the break happened in October, November of 2013. This is the weekly chart. On the daily chart, the market broke out and retraced. It tested the breakout point in December here and also in February, and accelerated northward, taking out the mid-January high of 166.68. So what we're looking for in the British pound is to see if we can break out of this triangle that I have drawn on the daily chart. Break out to the north will accelerate gains, and we could see the British pound go as high as 170 in the near term. If the market breaks below the triangle, we could see a retest of the 162 low. So that's what I'm looking for on the British pound. The Australian dollar is in a retracement mode. It broke out of a head and shoulders bottom. You can see the left shoulder. The left shoulder is here. Why does that keep popping up? Okay, the left shoulder is here. The right shoulder is in early March, and the neckline, let me just draw a horizontal line on the neckline. This red line represents the neckline. Left shoulder right shoulder. Let me make this font a bit bigger so you can see exactly. We have a right shoulder, our left shoulder. This will be our head. Okay, so that is our head and shoulders bottoming pattern that the Australian dollar just underwent. So we could see the market continue northward to test the 618 retracement level at 133.88, or we could see the market, the sellers come in at this level and attempt to take the market down to around 89 with an ultimate test to around the 87 level. So for the long-term picture of the Australian dollar, we may continue going up a little bit, but I am expecting the sellers to come in short order around one of these retracement levels to bid the price down. Now, to see if we can confirm a reversal on the Australian dollar, this 87, this point where I have the head, it has to hold. If the market does come back down and test this level, which is about 86.60, the market will have to hold above this 86.60 level. If it doesn't and the market ultimately takes out 86.60 level, we could see the market test the 80, the swing low around the 80 level. And that was the weekly chart. This is the weekly chart. This is the daily chart. So that's what we're looking for on the Australian dollar. On the Japanese yen versus the US dollar, the USD Japanese yen, we're in a consolidation. We're in a triangular consolidation, and I'm expecting, we're looking to see where the market will break from here. A breakout to the north of this triangle will have the market retesting the high up at 105.40. We're now at 103.20. If the market breaks below this triangle, we could see the market tumble down to the 97 level or the 99 level. So that's what we're looking for on the USD Japanese yen. The Euro yen is the same. We're in a triangular consolidation pattern. If we break out to the north, we could see this market test the 146 previous high around 145.68. If it breaks below, we could see the market tumble down to test 136, and if it breaks below 136, 132. But for now, the bias on the Euro yen is up. Okay, another market I will mention is gold. We have seen in the last 2 weeks that gold has tumbled from a high of $1,392 and now is at $1,295. I'm expecting the market to continue heading south, because if you take a look at the daily chart, we are in a downtrend, and the market traded up to the 786 retracement level on the daily chart and has been trading negative ever since. Again, what will be important is to see if the market can get down and close below the 1,240 level. And if that happens, it will set up a test of the low that was made in December of 1182. And as you can see, this 1182 low was tested once in late June of 2013 and tested again in December of 2013. So if the market does take out this low, that would be pretty significant. Okay, so that's what I'm seeing on the currencies. I look forward to your comments. If you have any comments, send me an email at beyond@acestrading.com, and I hope you have a good trading week. Thank you very much for listening.